Hey everyone, my name is Michael Feng. I'm the CEO and one of the co-founders of CoinAlpha. CoinAlpha is a small cryptocurrency startup. We are trying to decentralize asset management, and to prove that out, we launched our own hedge fund that replaces an administrator with a smart contract. And that makes it more transparent, efficient, and open for investors. Prior to CoinAlpha, I was a vice president at JP Morgan, where I created new types of derivatives. So we have a very esteemed panel of lawyers, startup founders, and other blockchain experts on the panel. Maybe to start off, each of you can introduce yourselves and your backgrounds.
I'm Mao Mao. I'm COO at Cora and co-founder at Cora. We are building a application-specific blockchain where we are embedding functionality for financial services, including identity or for money transfer, or the ability to create your own credit unions, your own transparent credit unions on the blockchain. And then we are creating an efficient market around the cost of providing this infrastructure to minimize the costs. And then we're letting people access the blockchain without internet. So that's what we do.
Hi, I'm Dean Alice Rockhind. I'm with Paul Hastings as an attorney. I've worked in most of my career on Capitol Hill in the House Financial Services Committee, Senate Banking Committee, and Treasury Department, and most notably worked on almost every banking law with the most notable securities law, which is the Jobs Act. I was one of the lead drafters in the Senate. And most of what I do is represent clients before Congress and before the agencies.
Hello, I'm Navroop Sadev, and I work for an asset management firm based out of Boston. We're currently building a trading platform for crowdfunded equity, starting with Reg CF and eventually opening up to Reg A and Reg T for those of you working in the space. I'm also a research affiliate at University College London, Center for Blockchain Technologies. We have around 100 scholars who are working on blockchain directly or indirectly, or the distributed ledger technologies, I should say, in general. At the same time, I work with researchers from the Harvard Law School in a research think tank called Koala, which is the Coalition for Automated Legal Applications. So that sort of gives me opportunity to work closely with lawyers. And other than that, I've also co-authored Hyperledger's Business Blockchain online course, and really looking into permission ledgers and in more compliant environments. So, yeah.
I'm Georgia Quinn. I'm the general counsel for CoinList. CoinList is a service provider that assists issuers comply with the securities laws when conducting token and token-related securities offerings.
Yeah. Thanks, everyone. So my first question, and I really want to center this panel around the topic, which is the future of the banking industry and how the blockchain can make it better. And so one thing that some of us have forgotten in the craze around ICOs and cryptocurrencies last year is that 3 or 4 years ago, hundreds of millions of dollars were raised for technologies and startups that were using distributed ledger technology that would use blockchain to make the existing financial world more efficient. And these are companies like R3, Digital Asset, Chain, and so forth. And so my first question for the panel is like, what has happened there? And it seems like it's been in a proof of concept stage for a long time. What are going on with those projects, and what are they doing to make their mission possible, which is to make financial services more efficient?
Yeah, I can take up that question. So I think that's tremendous, right? We do know that the cost for compliance for big banks in particular after the Dodd-Frank Act has been astronomical, right? We're talking billions of dollars per year. And I think some of the low-hanging fruit to the banking industry is really compliance, regulation, KYC, and everything around that. And at the same time, I think the reason why we are witnessing unprecedented levels of collaboration in the industry, industry consortiums like you mentioned R3, but also Hyperledger and the Enterprise Ethereum Alliance, is because the cost of moving from the current infrastructure technology to a new one is so huge that unless every player in the market, every player in the industry comes together and contributes to that, it is going to be a challenge, or I would say at least the big banks, right? And that sort of explains the kind of trend we are witnessing.
And just as a follow-up, there seems to be a bunch of different frameworks out there, whether it's Corda, Fabric, or the JP Morgan one. I think it's called Quorum. Like, do you have a sense of like how are they interacting with one another as peers, or are they competitors, or are they fundamentally different?
Right. So I think the consortiums like Hyperledger and the Enterprise Ethereum Alliance and Corda is the technical platform for R3, which is compliant and built to be the platform for go-to for big banks, are sort of competitors if you look at it, but then the pitch is that they're not, because at least Hyperledger is trying to be an open source go-to umbrella framework for all players to work together in a way that the standards are interoperable, and they can be existence of different standards. So it's not like a competition where, okay, I'm going to dominate the market. It's more like, let's actually go back to the original ethos of the internet and develop ways and things, in a way that they can all work together.
And maybe just kind of like opening that up a little bit. I think obviously these projects have been going on, and a lot of them are, like in various stages, ranges from proof of concept to production. But in our experience, what are the low-hanging fruit where this technology is actually going to make things better? I know, Momo, you're working on something in Nigeria. Like, how are you making, the lives of people there better using blockchain technology?
Yeah, so I can talk about some really low-hanging fruit, which is the 2.5 billion people with no access to financial services. Well, technically no access to digital financial services, right, because you still have cash. And then the 3.7 billion people that are underserved. And so we actually consider that a huge market opportunity because we have zero competition there. And so in Nigeria, we're building our blockchain, and we're providing identity and the ability for 300 farmers there to get paid, where previously they would have to drive 2 hours every 2 weeks to the city, get a big bag cash and drive back, and everyone goes to their house, and it was slow and convenient, expensive, and risky because you might get robbed along the way. And so I think in these emerging markets, I think actually the partnerships we signed after Davos are gonna substantiate that, but I think there's actually huge market opportunity in these underserved areas that are enabled because blockchain drastically reduces the cost to serve. And I think that there's the opportunity to leapfrog directly to these more efficient systems because there's nothing there.
I think the two areas that I see the ability for blockchain and distributed ledger technology to kind of revolutionize things is in the clearance and settlement process for transactions, securities transactions, but really transactions of all kinds, and the digitization of assets. And then I also just think there is something around the regulatory ability to track ownership, not necessarily in a continuously knowable way, but the ability to track ownership to detect things like insider trading and fraud and market manipulation in a much more timely manner than we currently can with current market systems.
I mean, I'll just add, I agree in terms of we're going to see a lot of displacement in terms of in the financial markets and how we do record keeping in a much more efficient way. But the other place where I see a lot of difference coming is in the mortgage space, which is very document intensive, and also title insurance. We still look to old courthouses with deeds. So for sure, I think this is really going to revolutionize the mortgage industry, and those who don't adopt the technology will be left on the sidelines.
Yeah, so all of this is tremendous. I think adding to those use cases, I would probably want to talk about the international money transfers, which is very costly at the moment, and a lot of the fintech innovation that you see, and startups which are currently focusing on these are well, Ripple, for example, right? And that's really huge, and that's like an obvious use case. That's an obvious efficiency that you can gain using systems which are reconciled from Genesis. And then at the same time, I think KYC requirements are huge, particularly for big banks. So, and that kind of ties into the identity use case, which is to my opinion, in my opinion, it's really exciting, and and it not just is required for compliance, but also opens up doors to a bunch of other industries, to secular identity, for example, that you own your identity and not Facebook, right? Your digital identity, for that matter. So yeah, it really kind of opens up the field, starting from regulated, compliant players there.
And maybe just in the interest of fomenting some debate here, let me pose an alternate theory on this, because I worked in banking for 9 years. So I feel like I have a good understanding from how bankers think. And my experience is that, for a bank to rip and replace an existing process with something new, that causes a lot of disruption. They have to be very sure it's going to work. Some people's jobs might go away. And the new thing has to be 10 times better than the previous thing for them to do it. And that's really only after maybe 5 or 10 years of shadowing it and proof of concept and so forth. And so, for me, having talked to a lot of people in the enterprise blockchain space, I feel like they've shifted gears a bit in the last few years, where they're trying to focus on use cases that are not just a marginal improvement, not just an improvement based on shortening time or decreasing cost, but focus on initiatives that are not possible today, using current methods. And so maybe can some of you talk about kind of like the challenges facing incumbents, and how, as technologists, we can help these incumbents either see the value or present different use cases that don't require the same level of disruption that might be entailed for a large-scale shift?
Yeah, I can take that up. First of all, disruption, as we talk about in the startup world, is different from disruption in the banking industry, where basically billions of dollars are on the line if any disruption happens. So there are a few things that have to happen before we can move to a new infrastructure, a technological backend, if you may. And I know from the European Commission, they have done a series of viability studies looking at blockchain for big banks, right? I think the recession really led the EU to look inwards and introspect on what is wrong and what does it mean for banks to be too big to fail. So there are ways around it. Things like you can give an option, for example, to big banks to either comply by using blockchain, right, a database which is shared and decentralized, or at the same time you can follow the traditional way of doing things. And I think banks will realize that it is in their interest to actually, even if there are some sunk costs in the beginning, to move to a new infrastructure technology where the compliance costs are almost zero, if not exactly zero. But this has to happen over a period of time, maybe like a window of 5 years. And after it's tried and tested and no big mishaps happen, I would say, the entire industry is expected to be on board. So again, the pace of it really depends on how the regulation plays out, if it stifles it or encourages it, and if it provides a safe environment to be able to, to fail sometimes and reiterate. Then at the same time, I think you're talking more about the attitudes of people, and then we are in the domain of psychology or sociology, as I should say. But then, I mean, think about, if you don't innovate, if you don't stay at the cutting edge, you will be disrupted. And it's happening as we talk about it, right? The entire crypto space is just exploding, and then we have CME on board and CBOE on board, who have started to allow Bitcoin futures. And I think the realization is there, and the major banks are looking to do things in order to, obviously include the technology into their current ways of doing things.
So I'm not just saying this because I'm a lawyer, but I just feel like so much of this is regulation driven, and you have this push-pull of disruption and technological advancements, but then you have what is going to be allowed by the regulators. And so when you think about the banking industry as the perfect example, the regulatory regime is probably the #1 obstacle when it comes to operating in that space. But then once you have set your compliance and you've operated, it then becomes your number one insulator to prevent other people from competing against you. And so it's not necessarily in the best interest of these big banks to allow this, these technological advancements and these, I really admire the EU and the position that they've taken in allowing this more regulatory sandbox type of place to exist. I don't think we have really anything like that here in the US. And a lot of that is probably because of the lobbying efforts of giant banks. So that's really, I think, the push-pull that we have to be realistic about.
I think I can build on that. I agree wholeheartedly that there are regulatory burdens, as well as there's also uncertainty within Congress about blockchain and cryptocurrency. The two issues kind of get mixed together. Congress is now at the point, for those who actually watched the hearing with Jay Clayton, he asked for all the regulatory agencies, there's an alphabet soup of them, to get together and come up with recommendations, and then give those recommendations to Congress. So what I think needs, and the other big threat is that you have the Treasury Department, Mnuchin, as well as the undersecretary that handles terrorist financing, very concerned about the free flow of money across the globe. And both the House and Senate are working on money laundering legislation that it's very hard to fight against that money laundering legislation. So you have the banking sort of establishment in Washington that have very heavy lobbying and PACs, et cetera. You have an industry that's not as well represented in Washington that has that uncertainty. I look to all of you, especially the technologists. We really need to be going up in an organized way to Capitol Hill to explain how this new technology is beneficial to the government, how it's going to make it more efficient, and how, in terms of things like money laundering, that even though anarchists created blockchain and some of these cryptocurrencies, the beauty of the blockchain at the end of the day is it's way more, transactions are way more traceable than bags full of $100 bills. So those of you who are technologists, I really call on you to work together, work with me, whoever it is, to go to Washington and either take positions in the administration or on the Hill, or walk around and talk to policymakers about what's happening out there.
I think we're actually looking in the wrong direction, in the sense that, so I used to be a management consultant, and back in 2014, we were talking about it's blockchain, not Bitcoin. We got to be careful about the regulation, got to go explain blockchain to people. And not that much, let's start with settlement clearing, and not that much has happened, let's be honest. Because I think that instead of focusing inwards on the least risky parts that you can maybe eke out, 20, 30 billion of like tech, efficiencies if you're lucky, is really the huge market that can be captured by making banking a utility. So Accenture has done its study saying that the full market size of the unbanked is around 380 billion in revenue annually. We have two banking partners in Nigeria, and that's the market that they're going after. Is that okay? There's a lot of competition among urban, around middle-class Nigerians. Let's go for the farmers. Let's try to serve them. Let's go after international payments to producers. Let's try to serve them. I think let's try to open up decentralized sharing economies for trucks and for tractors. Those are the opportunities that, by embracing this technology and seeing the opportunities in markets that are enabled, I think there's a much bigger revenue opportunity there than trying to, reconcile books between like 9 banks again.
I see you're a forgiveness person, not a permission person.
I'm not saying we won't be compliant.
No, I just also want to point out, we're fundamentally talking about two different markets. So, we're talking, or I was speaking about the U.S. market, well-established, trillions of dollar marketplace. I wholeheartedly support what you're doing. I just think it's a different environment.
Yeah. Maybe I think that raises the question, which is, is it like, should we be starting with the less kind of like less regulated markets like Nigeria, or let's say Estonia, and these are the places that seem to have more embraced blockchain technology? I mean, like Venezuela just announced plans for a cryptocurrency. Is starting with developed markets like the U.S. really the right approach?
I think it's very dangerous if you're starting with Venezuela with all due respect to Venezuela, my thesis advisor was from Venezuela, and I have a lot of respect for him and everything. But I mean, look at what's happening in the country. It's because they're going broke. They want to now launch a cryptocurrency and do an ICO. So that's exactly what should not be happening. And I think really the sophisticated and mature markets are really where the opportunity lies. If we can prove this here, then it can work anywhere. And so again, I think it depends on the kind of background we come from. There's this crypto anarchist point of view, and you can argue that Bitcoin obviously was built, invented in order to bypass the traditional finance industry, a global payments network which it does not need any kind of bank to go through. But does that mean we should stop there? I think the technology is so promising. We should definitely be utilizing it.
But I guess to me, it sounds a bit like it's like the West is a big brother that's saying you guys over there that don't have regulations, this is too dangerous for you. We're going to vet this ourselves, take our time to actually make this happen before we allow you to use that technology. I mean, isn't that kind of like the framework that you're proposing?
No, I'm not. I think maybe I didn't articulate it that well. What I'm really saying is that, of course, all economies should be looking at the technology seriously, right? There are some promises, and it's funny you mentioned that, because I think the real promise of the technology is in use cases other than finance. So what really excites me are things like identity. There are millions of refugees in the world right now which don't have identity documents which are valid in a different country where they end up, say, Germany. Your diploma from Syria doesn't mean anything. You may be a doctor there. So that's where the real promise of the technology can play out right away. And we don't even have to wait for regulation or clarity from the regulators for that matter. So yeah, no, that was not what I was saying at all.
No, sorry, I just want to familiar a little bit, but maybe actually, because I think regulation seems to be something that comes up a lot, since you're at CoinList, and you're obviously worked a lot with regulators. Can you talk about kind of like what is the regulatory stance toward cryptocurrencies right now, and kind of like what needs to happen over the next few years for it to be something that's proven and legitimate, at least in the U.S.
Education, more than anything, pure education.
Yeah, I would agree with that. I think there's an education that really needs to go on, both on Capitol Hill and within the agencies. And when we talk about the agencies, it's really the SEC, the CFTC, the CFPB, the Treasury Department, FinCEN, the state regulators that regulate money transmission. So there's a whole alphabet soup of folks that you need to really get in the know.
We're running out of time, Michael. Thank you. We just have one question over here. You want to have a question? Gentlemen, have a question.
Good evening, everyone. Just hearing about you said the most important piece is education. Looking at the world from a regulatory standpoint, and to Mau, I was in Davos at your presentation. Looking at the world with reference to regulation, so you have FATF assessments and AML and KYC. Wouldn't you say that's the most important piece? Bringing the developing world with the advanced world, saying that so you can have an Estonia, and so you can have a Gibraltar, you can have a Bermuda, and we all have the idea to change the world and for our economies to benefit, but the only thing that is keeping us from all having this thing organized are regulations, internationally, globally recognized regulations, whether it's FATF, whether it's the KYC, AML regulations. Wouldn't you say that the regulating of the industry is most important so the developing world and everyone can indeed be in the market, including Venezuela?
I would say it can give you a competitive advantage, because now for the first time, Bermuda can become a fintech hub, right, in the world. And we actually, as we speak, are setting up a crypto task force exactly to position it as such. Things move slowly in huge economies, but small countries have the benefit of being agile, right, and use the regulation in such a way that it encourages innovation, but at the same time is not just a mimicry of what's happening in the developed world, so to say.
Yeah, and I was going to say, I agree that especially in Bermuda, but also like in underdeveloped countries, there are a lot of uses and advantages in those countries where you don't necessarily need to be dealing with the US. So I agree there are some advantages right now for Bermuda.
I think to fully realize the true potential of this technology, obviously a global regulatory structure would be necessary. Is that ever possible? Like, I don't know. Jury's out. But obviously, like, that is the true beauty of this technology. It has no bounds, right? It doesn't recognize borders and ethnicity and socioeconomic status. It's boundless.
So,
I think,
Yeah,
so quick,
one more
actually, could I
question.
just comment on that one real fast? So I think that when we say regulation, I think we need to dig a bit more. It's not simply, I mean, you have stuff like CCAR or LCR where you actually have to maintain principle, which is one thing. But I think for a lot of these like cross-border payments, it's actually more an issue of ambiguity in regulation. And where there's ambiguity, there's risk. And where there's risk, costs go up and business becomes harder to do. And so to pull back the curtain a bit on what we're actually working on at Cora, one thing that we're working on is creating private blockchains where the auditor, the money transfer operator, and the bank can always be in consensus every step of the process, where every piece of the AML or KYC system, which is defined as a smart contract, can be verified and you have proof of process, literally real time. I think that's one thing where you absolutely eliminate any ambiguity between you and your auditors and your bank. And I think that is actually will help scale cross-border transfers.
Is that a regulatory blockchain?
No, it's for doing cross-border transfers.
Okay.
so I don't hear anyone talking about Bitcoin as a store of value, right? I mean, if you guys believe that Bitcoin is a store of value, then it's competing directly against gold, the US dollar, the yen, the euro. So how do you see government kind of reconciling the fact that they love the technology if it reduces costs for banks, but they don't like if it's going to replace their own currency?
Let me comment. I really like your Pac-Man analogy that you talked about earlier, and sort of this notion that in underdeveloped countries where they can't depend on their currencies, although I'm not keen on Venezuela because of sanctions, but that this gives them a way to that in those countries there's actually cash. I think as it becomes more widely adopted, and as the industry matures, the banks will start to feel like they have to adopt it. I mean, the other piece to this that is really important about yesterday's hearing with Jay Clayton really has to do with the fact that he was very focused on the companies that are the exchanges. And those exchanges, the SEC and the CFTC, have enforcement authority but no regulatory authority over those agencies or over those exchanges. Those exchanges they have state-by-state money transmission regulation right now. And so there's a lot of concern. And I think if there were, I don't know if it's better.
That's not true. The Bitcoin and Ether are considered as a commodity.
Yeah,
Hence,
but,
the
yeah.
CFTC has full regulatory authority. They just decide not to take action. But if you wanted to trade any other commodity, you could not trade it in an unregulated exchange. You have to go to the CME. You have to go to the grain exchange or or the CBOE. So it's lack of action here.
Let's table that discussion since
I was
it's
going to
not
say,
really relevant
I'm
to the
just
panel.
telling you what was said in the testimony yesterday. Both the SEC and the CFTC were asking for authority to regulate those exchanges, and the states are not super happy about it. I don't know what the answer is, whether it's a 50-state solution but I'm just telling you what was said and said repeatedly at yesterday's hearing.
Maybe just to bring this back, my view is that before cryptocurrencies can be talked about as a store of value, we have to prove that they are valuable. And in my opinion, as a technologist, what that means is showing that we can make an industry like banking more transparent, and efficient, and secure. And I think a lot of us in the panel are working toward that. And so I know there's another panel coming up, so we want to make sure that we give those guys time. Please find us at the networking event or after the panel if you want to discuss further. Thanks.
I have one question.
Oh, great.
From you over there. You guys at Stanford, how many people come out of the Stanford ICOs?
Quite a lot. So Filecoin came out of Stanford. Lightning Labs came out of Stanford. There's not a lot of ICOs going right now. But I think the important thing is not Stanford as an institution, but more that I think that from both Harvard, Stanford, all the colleges in the U.S., a lot of the younger folks are embracing this technology and are trying a lot of very innovative things with respect to both finance, supply chain, and other use cases. And so I think we need to foster that because that entrepreneurial spirit is what makes technology more valuable and more used by everyone.
You got any investment from alumni or StartX?
Yeah, so StartX is a Stanford incubator. They don't take equity, and it's very unique in that all it does is promote Stanford entrepreneurs and helps them be successful. And so the companies I mentioned, like Filecoin, Lightning Labs, We Trust, us, we're all StartX founders. And I think we don't advertise that publicly, but I think a lot of our success today can be attributed to StartX.
Thank you very much.